Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, June the 3rd, and wanted to talk about what we saw in markets last week, what is moving markets forward now, and what is we see moving markets and major impacts on markets moving forward. So wanted to really touch on those key indicators of what are moving markets forward here. So last week was a very strong week in the S&P 500. The S&P 500 finished the week up 1.3% last week, and the small and mid cap indexes, the ones that we've been talking about, actually outperformed the S&P 500 on the upside, outperforming them for the week. And as we've entered into this week, it's a shorter week of trading. I hope everybody had a wonderful Memorial Day weekend. But we do have a shortened trading week this week, but a lot is going on this week, especially a lot of eyes are going to be focused on tomorrow's jobs report. Last month's was a little bit disappointing, and a big number is expected for tomorrow. The private sector reported 1 million new jobs for the month, and so a big number is expected for the jobs report Friday. And one of the things that we keep coming back to, and why you're really seeing markets very muted this week, meaning pretty much hovering around the flat line, not moving up much, not moving down much, is the fears of inflation have creeped into the market. We've pretty much gotten through the bulk of earnings season, and we know that earnings have been very strong, and corporations are reporting phenomenal earnings. And believe it or not, the S&P 500 from a price to earnings multiple is cheaper right now than it was in January of this year, and that's including over an 11% return on the S&P 500 for the year. And so earnings revisions for next quarter are actually up 60% from where analyst estimates were at the start of this quarter. So they've bumped up and raised guidance on analysts by 60% moving into next quarter. So, but the number one fear that is weighing on everyone's mind is inflation. Is it transitory, meaning is it short term, or is it long lived? We've seen it in the data, the CPI index, the PPI index, the producer price index, and the consumer price index have all shown us that inflation is here. And the question is, who benefits from inflation, and what companies are able to see through it, and how do you position your portfolio to deal with inflation, especially if it's short term? One of the things to really consider and understand is some of these corporations that are very well positioned to deal with inflation are going to be more of your value oriented names anyway. One of the reasons why you've seen value outperform growth over the course of this year is not just from a catch-up trade that we've seen, but also these cyclical industrials benefit, believe it or not, from inflationary environments. The group that gets hurt from inflation is going to be your high growth names. And that's what you've seen in the market with your growth sector really underperforming the S&P 500 as a whole this year. You look at it, the growth sector is only up about 6%, while the S&P 500 is up over 11%. So you could see the divergence there between the two, and that is, as investors are preparing for inflation to hit the market, they're moving to the more cyclically oriented names, these companies that are able to pass on the price increases to their consumers and pass on price increases of their products to their customers. Another thing that has investors kind of wary and weighing on the market is kind of some Fed speak that's coming out from some of the Fed presidents. And if you don't know, the Federal Reserve has been buying securities since the pandemic, mainly mortgage-backed securities, but they've been making very large asset purchases over the last year. And some of the presidents are coming out saying, well, the economy is doing very well. Maybe we've got some inflation here back in the market, or back and it's real. So maybe it's time that we taper off or back off some of these asset purchases. So again, those are some things that are weighing on the investor's mind. That's why you're seeing markets flat. We don't have earnings. We're waiting on that for the end of the quarter, moving into next year. Not a lot of major headlines. We have a big jobs report on Friday. So markets have been just kind of waiting time to get this data in and digest it and move either up or down off of the numbers and the data that we're getting. So as always, if you have questions about what's going on with your individual portfolio or ways in which we can help you navigate through this time, feel free to give us a call. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Talk to you next week.